In recent times, Africa has become the epicenter of mobile money transactions and services. In the year 2020, the continent had 60 million mobile money accounts that were created. This was favored by growth in Central, East, and Southern Africa, which have made tremendous efforts to provide telephone services to consumers in those regions. Banking institutions have also been setting their pace, as they have also taken the advantage to provide mobile money services and digital remittance services to the African continent. However, challenges do persist, and that is why we are going to talk about that in this edition of the program. In this edition of the program, we shall be looking at the factors that are driving the growth of digital financial services on the continent. We look at the difficulties as well as proposals that could ameliorate digital financial services in Africa. Stay with us. My guest is a business development expert with expertise in the digital financial world. He's worked for several companies in Kenya since the year 2002. In 2017, he joined TerraPay and now heads the East and Southern African division of the Netherlands-based company, as I mentioned earlier, which is known as TerraPay. He is Willie Kanyeki. Willie Kanyeki, as I mentioned, is the regional director for East and Central Africa at TerraPay. He joins us live from Nairobi in Kenya. Willie Kanyeki, we are indeed very glad to have you. Thank you for talking to us on In-Depth right here on Dash News.
Thank you.
Africa has witnessed a massive penetration of mobile telephone networks within the continent. Willie, can you please tell us how this has affected the flow of digital services on the continent?
Right. Once again, thank you for having me on the show. So you can see, we've seen that fastest growth that's coming through from mobile penetration on the African continent. Based on the research we did with the team at IBS, we found that approximately 50% of the population today, has a mobile device. And this is projected really to grow to 634 million, users by 2025, which in essence, as we speak today, 60% of the adults in sub-Saharan Africa actually have a mobile money account. Now, what does that mean? It means that penetration is driving the usage and consumption of digital mobile services across the continent, driving innovation and driving access and financial inclusion. So I think, the horizon is looking very positive, and this is just the initial, opening phase, you can say, in Africa when it comes to digitization of payments.
Now, with the number of youths, 60%, like you said, who have mobile money wallets, can you please, let's look at the geographical aspect of it. Which parts of sub-Saharan Africa are thriving and which other areas are lagging behind? And what could be the reasons for either the progress or the decline?
Right. I think an excellent question. Looking at the research that we did, we found that 72% of the new accounts, or the growth that's coming through, was actually being driven from East and West Africa. And the primary players here being Nigeria, Ghana, and then you look at Kenya, Uganda, Tanzania, and Ethiopia in that space. So, with the sort of growth coming through from West Africa that contributed 21 million new registered accounts, and then East Africa with 22 million new accounts. The question is why? You know, what's that growth, or what's driving that? What we found is quite interesting. Number one is the youth demographic. So you find in this region there's a high concentration of the youth that are coming through. They're willing to explore. You know, this is the new generation that has no, how can I say it, inhibitions or challenges in terms of going and using digital platforms.
They call it the
they're more
information
interested in
superhighway.
cashless and frictionless transactions. Then again, there is the ease of access of mobile money, right? So you find in this region, there are a lot of agents that are cut across both in the urban and in the rural areas. So that also driving that penetration, increased adoption due to COVID. COVID also, led to this, where there was a real drive, you can say, both from a telco perspective and from the government to drive contactless transactions. So you've seen a lot of those sort of combinations that have really driven that sort of growth that I've mentioned. And most importantly, I think trust. So the users now have a lot of trust in these digital platforms, and they're able to then use that. Yeah. So this is, ideally the key elements that we found in the research.
All right. Now, looking at what you just said about the flow of mobile money services across the African continent, like I asked earlier, for the zones that are lagging behind, the regions that are lagging behind on the continent, what could be the reason why mobile money penetration is not that strong, like, for example, in East and West Africa?
Yeah, maybe it could be elements of the rollout of the service. Have the players, the mobile money players in those regions, have they rolled out of usage? What's the experience when it comes through? When you look at elements about the agents, elements about trust. Elements in terms of the strength of cash usage, the P2P via the cash mechanics. Is there any cultural challenges that also affect that? And maybe also from a regulatory environment, is the regulatory environment conducive to the adoption of these sort of services? So I think there is a myriad of reasons why maybe East and West Africa have really set that pace going forward. In other regions, say like in South Africa, where you already have the credit card system quite strong, the schemes there are quite powerful. So question then becomes, they already have solved a certain pain point within the community. So it becomes a journey of that sense.
All right, Willie, right now at the moment, there's been so much talk about financial inclusion on the continent, which means that the woman who grows her maize maybe somewhere in rural Kenya could be able to do smooth business with someone based, let's say, in Kumbaye in Cameroon without any hitches. Do you really believe that mobile services has led to the strengthening of financial inclusion?
Oh, yes, truly. And speaking as a Kenyan, seeing the sort of revolution that's happened in this country, 100%, I would say that that's a true statement. What it's done is, there is a lot of new innovative services that are coming through that are now tapping into the unbanked or the underbanked, using the example that you shared of a rural woman somewhere in Kenya, that could be somewhere maybe in Kitale or in Moranga, sitting out there, just within her day-to-day activities without having to leave her farm. The farmer can be able to access microloans. They can be able to access micro insurance services. They can be able to make payments, or more importantly, to receive payments. Maybe she'll sell her wares. Somebody can pay, her directly without having to meet face to face. So a lot of time and effort is spared in many ways, for the rural folks. The other thing that's quite critical to note is even with these, communities that you mentioned, there could be some interventions that are being done either by government or by NGO players that are meant to uplift them. And what better way of reaching the last mile of that individual than by paying them via mobile money direct into their mobile account? So I would say in many ways, it has really gone out to really improve and bring in a lot more folks that were either unbanked or underbanked within, across Africa.
All right. At the moment, what could you say could be the advantage of digital financial services? In fact, let me just put the question straight and simple. Why do you think it is important to learn and have knowledge on digital financial services at this point in time on the continent?
Why is it important to learn?
Yes.
If you could repeat the question.
Yeah, what I asked is, why is it important for Africans, particularly those in the rural areas, to have knowledge about digital financial services at this point in time on the continent?
Okay, very good question. I think it's critical on many levels. When you look at, part of the studies that we did do is you see that there's a lot of benefits that accrue to the communities or the persons that are using, say mobile money services or any other digital payment services that are there. Why is it important? Because it will help to uplift these individuals. Because to participate in that space, one would be able to, to enjoy the sort of innovations that are coming onto the continent. I think for us as Africans, we are leapfrogging a position where we do not have access to a lot of services. And I'll give you a few examples. Number one, micro savings. So, it's important for our people to be able to participate. They can be able to do daily micro savings. So you have a minimum challenge and then you put in a few either shillings or francs every day. You put that aside. Also, you can participate, by getting institutions, fintechs that are able to lend to otherwise folks that will not be able to get any credit, based on the sort of credit history that they're able to generate. For example, if you're on a mobile money platform, then you have a history that then can be used to lend you some finances. And also critically, if you look at things like insurance penetration, which is very low across all of Africa, then there's this opportunity then that comes in where you can insure your crops, you can insure your animals via, the new innovations that are coming through. So why is it important? I think there's a lot of upliftment that comes through without even mentioning from a remittance perspective, if you have family and friends that are out in the diaspora, instead of money being sent via multiple channels and delaying in getting to the intended beneficiary, the person can now receive funds directly into their mobile money account. So there's a lot of benefits that accrue in terms of, those on the continent getting to be more literate when it comes to financial matters, digital financial matters.
All right, that was a good one there. Now, still talking about mobile money. Despite the extension of mobile money services, we've come to realize that the number of active accounts of mobile money services still remains low in Africa, is still lagging behind. What accounts for this?
Yeah, actually, that's a very interesting observation that you've put through. The issue or the reason why this is coming through, based on the research we did with IBS, we found that two things really stand out. Number one is that there's a gender gap. So you find that women are approximately 30% less likely to have active accounts. Why? Because of what we just talked earlier, financial knowledge, right? Then there could also be the element of cultural challenges. So in certain societies that are, headed by the patriarch, there could be challenges that then accrue for the women sitting in those societies. And then the other one that we found quite interesting was the lack of a steady source of income for the women. So that gender gap has led to, yes, on one hand, they've registered accounts, but then again, they're not as active. So that is one part. The second one is the costs that are associated with the transactions. So you see digital transactions are in competition in many ways with cash. So if I and you were, standing in the same place and I exchange money with you, there's a minimum friction cost that goes into that. Now, with the digital ones, there could be a certain cost that's associated. And that, has more or less led to this disparity that you have mentioned. But then it's one that's being worked on. We can see a lot of innovation. We can see a lot of, positive outputs that are coming through that will keep reducing the element on cost and drive up the gap between the registered accounts and the active accounts.
All right. Now, most African families depend on remittances, particularly from abroad. And with measures taken by the state and private sector in most parts of Africa to digitalize remittances, there are still some challenges. What are some of these challenges and why do they keep persisting? Why do they hinder digital remittances?
Right, yeah. So, a couple of those that we found in the research. One is the one that I've mentioned on costs. So you find transaction fees have an impact on the adoption rate that goes through. The second one is what we've also talked about, the financial inclusion, where you find a certain segment is left out because of financial literacy, right? That cuts across different geographies. So, for example, the financial literacy, say in Kenya, if you compare it maybe with a country where there is low adoption on digital transactions, then you find that there would be that sort of a gap that steps in. We've also talked about the gender aspect and also the age groups. So what we found is the older the groups, chances of playing within the digital space is a bit more limited than even the younger ones. The African youth is quick to adapt this. So those challenges do exist. And then the other one that was quite interesting for us was on documentation. So you find that part of the challenges that are coming through is where documentation is a challenge, where you have diaspora Africans out there that have a challenge when it comes to the KYC documentation that's put through, or the sort of KYC requirements. You're meant to produce a couple set of documentation to be registered and all. Now that could be one of the areas that brings out that negative impact.
But now, from your observations, what solutions do you think can be brought forth to resolve these challenges?
So I think one is the sort of active role that we have seen from regulators and the central banks, so to speak, when it comes to costs. We've seen in instances, especially during this COVID pandemic, where there was an initiative or a drive by the regulator to reduce costs for certain level or threshold of transactions. In some instances, we found that regulators, stipulated that they should be free of cost so that money can circulate and people can be able to, buy goods and services that were quite required at that, during this season. The other one is we've seen both from a private sector and also from a government perspective, where financial literacy classes or communications going out to the masses, where people would sit and be given briefing in the rural setups, people that are unbanked or underbanked being given the merits as to why they need to play in the formal space. So we've seen a lot of that. And also from our documentation, we've also seen areas where now, eKYC is being, sanctioned or approved by the regulatory environment. So all these combinations are bound to bring up and drive up the digital remittance space.
Now, one aspect of digital finance is the interoperability of platforms, where in many countries we find that many platforms do collaborate in a bit to ease transactions. How is that playing in Kenya, where you are based?
Yeah, so quite an interesting observation there. Just recently, we've seen the major players here, the mobile money players here, in collaboration and in support with the regulator, have opened up, interoperable merchant payments. So, if you're using network A, you can pay for goods and services at a merchant point of operator B. So, in essence, what that does is that it frees up the sort of opportunities. It opens up space for me as a consumer or customer to be able to make payments roundabout anywhere within the country. So when you have this sort of interoperable platforms within, a country, that's from a domestic standpoint, and then maybe stretching it into a regional interoperable space. I think the benefits to drive innovation, the benefits that then accrue from a cost effectiveness, then start stepping in, and then you build on the economies of scale. So, I think there's a lot of positives that are coming through by, driving this standardization and driving the interoperable platforms across, both from a domestic standpoint and also a regional standpoint.
But now, how is this playing on banking, particularly over there? Do you think that this may have either a positive or negative effects on banking, on the banking sector?
Yeah, so, it's one of those things, and that's a good question that you put forth. So innovation, by its very essence, will disrupt a lot of what you can call the standard or the old way of doing things, right? So there's a lot of disruption that will come. We've already seen that in this part of the world. Where disruption has stepped forth. But the banks also are not, they're not sleeping or lying low. Yeah. What we've also seen them do is innovate, where they've come up with apps that are able then to provide some of the services that, they were seeing going out to quote unquote the competition. So today with the apps that exist, you can be able to pay for utilities, you can be able to move money from one bank to another bank. So yeah, I think it's open field right now. So the banks are not lying back or stepping back and letting the show run, in a certain way. I think they're also active participants in a way. But what it has done is that it has forced the banks to also think about innovation, to also think about the changing demographic profile, right? So like, I'll give you a quick example. When my father was my age back in the day, to open up a bank account, he had to be very well dressed. He had to know like 10 people who already had bank accounts in the certain bank you wanted to open an account. And it was a very long, process. Yeah, process. But today, with eKYC, you can open up, a certain digital account by the comfort of your home. So you can see that whole trend has changed. And with that, it's also forced the banks to then also adapt to the new realities. So yeah, I would say, the game is still on, both for the fintechs, the banks, and the MNOs. And, the winner of all of this is us, the customer. It's me and you.
Okay, now let's talk one aspect which is always making news when it comes to digital financial issues. We are talking about cryptocurrencies. In some parts of the continent, it's very controversial. Some governments do not even want to hear about it. Other countries have decided to embrace it. Where do you see the future of cryptocurrency within the digital financial space?
Yeah, so I think the jury is still out on this one. Like you've correctly stated, different environments are, viewing this crypto, some in support and others with suspicion, right? Yeah. So the jury is still out on this. But crypto has the potential to transform the payments environment, that's for sure. It can significantly reduce the cost of transactions and also increase the speed of settlements. So there's a lot of positives that can come through from crypto. The question, though, is how will it be regulated? I think that's the bigger question that all the jurisdictions are trying to battle with. How do you regulate crypto? So yes, different geographies are thinking about it in different ways, but I suspect down the road there will be a convergence of a way forward, and we see crypto being here to stay.
Yeah, crypto has come to stay. Now, looking at the influence in Africa, does Africa provide a good market for the flow of cryptocurrency?
Sorry, just repeat that. Wasn't as clear.
Yes, I was asking if Africa provides a conducive market for the flow of cryptocurrencies on the continent.
Oh, yes. So we've seen in our research, we did see that quite interestingly, that say countries like Nigeria, the population there is, I guess, because of youth and because they're also financial literate, there's a lot of, activity within the crypto space. In fact, one of the reports stated in terms of value of a transaction, Nigeria was actually in the top five countries that are playing in the crypto space. So yes, I think the appetite is there, even within Africa itself. We do know that certain geographies are also, driving some sort of tests within their own environments, some sandbox environments that are there. So yeah, let's see what comes out from Africa in this space. But the youth are driving this, right? They are less risk averse. They're more in tune in terms of what the global trends are within the digital environment. And yeah, there's quite a bit of advantages that then accrue from this, both from P2P, person-to-person type transfers, and also for the businesses. So there's quite a bit of interest, within that space. But I must reiterate, for crypto and all to survive or to thrive, trust will have to be the major ingredient that will be added into this to make them really a big success.
And how can that trust be instituted, knowing fully well that some governments don't really trust the system because according to them, it's so vast that regulation is a very tough aspect to go into. So how can they bring in that trust so that both parties can benefit from it fully?
I guess, the crypto environment as it stands today is very fractured. So it's going to be, I think the person that cracks that one will be sitting on top of a big pile. So it's a lot of work in progress. There are so many different cryptos out there. Now, which one will be the one that's organized, which one is not? And that's a head spinner. So I think it's one to watch. But I think when it comes to, say, central bank digital currencies, that could be one of the ways to look at it. Things that of that nature that are regulated. If you're able to regulate it somewhat or provide some sort of control, then maybe then the element of trust then steps in.
All right. Now, looking at some of the countries that have gone to make digital financial currency official, we're talking about Nigeria that came with the e-Naira, Ghana has come with the e-Cedi, and some other parts, some other countries in Africa. What could be the advantages of such an idea when the state decides in itself to make electronic money an official legal tender?
Yeah, I think for me, the main takeout there would be that question that we were talking about, trust.
Trust. Yeah.
If it's done by the central bank, then all the different players would build a lot of trust in that system, right? Be it the individuals, be it the businesses, the merchants, everybody across that sort of an ecosystem. So I think when it's driven by a central bank, then there's a lot of traction that comes through.
Okay, we have also observed that remittance companies have been adopting mobile money services into their financial system. What do you think is driving this flow?
Yeah, so basically, just take that question again, my man.
Yeah, remittance companies are incorporating mobile money services into their financial transactions. What do you think is driving this flow where we see remittance companies adopting mobile money?
Right, yeah. So I think it's driven by the fact that, when you look at the African landscape, and more so when you think about East, Southern, and Western Africa, where the penetration is quite deep when it comes to mobile money, it just offers a new channel for these remittance service providers to collaborate and partner with, the mobile money networks across the board. Why? Because it drives increased penetration. There's a wider agent footprint, is a lot more cost effective. And then again, the user demographics are also changing. So, the traditional remittance way, which was cash pickup, or you go to a brick and mortar, either you go to a bank or you go to an agent, all these are changing where people are receiving funds on their mobile. And then again, let's not forget what COVID did, right? So COVID was able to drive up the contactless way of receiving money and also even making payments. So we've seen this sort of a combination driving a lot more of the whole digital fusion, so to speak.
Now, let's talk about provision of telecom and internet services to Africa. In most parts of the continent, telecom and internet services are being regulated by the state. Do you think that this, at a certain point in time, slows down the growth of digital financial services?
Yeah. Hello? Yes, if you don't mind, the line wasn't too clear. You want to repeat that?
Yes, I'll repeat it. Let's talk about telecom and internet services, which in most African countries is regulated by the state. Do you think that the regulation of internet and telecom services may likely work against digital financial platforms and services?
Right. So, based on the research we've seen and then what's happening on the continent, we have seen a slightly different position, which is, there's a lot of efforts that are coming through both from the private sector and also from the government. And I'll give you a very classic example, right, when it comes to internet. In the recent past, it would have been a dream or an almost impossibility to do, either music or TV streaming, or movies. But you have things like Netflix now that are being streamed across, handsets, laptops, and all across Africa. So we can see that the cost of, and access to the internet is actually gradually and significantly reducing. So that penetration and all is growing. The telcos have stepped up when it comes to the costs. The players in the data space have also stepped up. So we can see the cost of data significantly dropping, just using the anecdotal evidence that we've seen around. But then also don't forget some of the services that are offered by the mobile money operators are driven by USSD, which serves folks that do not even have smartphones. So the internet alone, either the cost being a function, may not necessarily stifle the engagement in the digital financial services. For example, here in Kenya, there are a lot of services that you're able to enjoy via USSD. So there is no need for the internet, so to speak. And also, because I've been to Cameroon quite often, the USSD services, they are also very vibrant. So, we can see that there's a lot of growth that will come through. Cost of data is decreasing. And then again, the, digital financial services can also be provided by USSD. So, I don't see, major challenges for us as we go forward from an innovation perspective.
Now, the white paper study by TerraPay also indicates that remittances made by digital wallets are being channeled into food and they are funding local businesses. What will you say is a reflection of this particular observation? What does this reflect?
Yeah, I think that's one of the very interesting aspects and one of the philosophies that we in TerraPay have, right? We believe that the smallest transaction deserves the sort of respect as the largest one. And what you have actually stated is what we have seen, in terms of remittances across the continent, whereby the diaspora are sending remittances back home for really day-to-day, very basic usage, right? When you think about food contributing, what, 21% of, the remittances that are coming through. When you think about education and business, playing that sort of a significant role. So what you're saying is close to 60, 70% is on really basic, aspects of day-to-day survival. So it says that the people receiving are really reliant on their friends and relatives that are out there, the diaspora, to help them go day to day. And I think that's a major statement right there in terms of the sort of collaboration and the sort of services that providers such as ourselves provide to do and drive financial inclusion across the continent.
Now, the same report also indicates that domestic remittances are convenient to cost, and that domestic remittances are sensitive, rather, to cost and convenience than international transfers. Yes. Can you explain the trend? Why is this so?
Yeah, I guess in a domestic setup, right, there are many options that are in play for, its friends. That's what we saw, its friends and family sending P2P money to each other. So they have multiple options, and especially, cash remains as king. So what is critical in that space is, from a domestic standpoint, they would hesitate. If me and you were in the same vicinity and I wanted to send you money, then there's an impact there. I have to think cost and then I have to think convenience. But when it comes to the international remittance, then, because of the distance, because of the gap in space and time, then you're bound to more or less not be as sensitive to cost and convenience in that sense. So this is what came through.
All right, now let's talk a little bit about QR codes. What are QR codes and how are they advancing digital financial payments on the continent?
Yeah, so QR codes, by the very definition, is a quick response. So, the particular QR code is part of the innovation that's coming through from digital payments, whereby, there's reduction in terms of payment friction. So it facilitates instant payments with that code, which is really, as I read somewhere, it's the barcode on steroids. So it carries a lot more data. You can have static codes or dynamic codes. And really what they do is complement the existing and traditional POS devices that are there. But one of the key features that comes through is the ease of setting up, because all you need is a minimum infrastructure. So maybe it's a smartphone and then a QR code that can be stuck. Yeah, the merchant can stick a certain code on paper and people can scan that and then make payments. So in essence, we see QR codes slowly but surely driving another new level of innovation that drives, the sort of stickiness and reduces the friction and also speed of making payments.
Now, digital local small and medium-sized enterprises in Africa depend on these digital services for their survival. Where do you see Africa in the next future should more SMEs embrace financial technology?
Oh, yes, very much so. They definitely should. Why? Because if you see that combination of SMEs reaching out to the social space, so be it, say, like a Facebook or any of the other popular ones, they can be able to, market their products. They can be able to position their products. But most importantly, they would be able to collect payments. So I think for me, it is one that they have to embrace because it extends their reach. Right? So they would be able to drive that. They can function, also get credit, because as they drive this sort of business, and especially the smaller ones, they would be able to get microloans. They can be able to get, a credit history for them. Maybe they are underbanked. They would get to a stage where they can be, receiving certain services that only the top end, enterprises would receive. So there are a lot of positives that come through on one side, driving up business by increasing the market, addressable market. And then on the other side, getting credit. That's the engine for growth. So I think there are a lot of positives that come through by embracing, the fintech space.
All right, Willie, we have come to the end of this interview. But before we go, do you have any important message for the continent as far as digital financial services are concerned?
Yes, I do. I think my message for the continent is one that, as Africa, I think we are, on the cusp of driving this revolution to the next logical phase. There are a lot of opportunities that have come through. Africa right now is like the center or the heart of mobile money, globally. And with it comes up a lot of opportunities which would otherwise not have been easy for us. There was a major challenge back in the day to get credit cards, debit cards, to get bank accounts and all. But now with this whole digital revolution, I think we're able then to leapfrog. There are a lot of opportunities that will come to us as a people. We can get insured, by micro insurance. We can now be able to get money. We can be lent money using the data that we have, using the mobile money track record. So there are a lot of essential benefits that then accrue to us as a people. And I think the next couple of years would really be for us to drive innovation, to drive growth, to drive financial inclusion, and most importantly, to be able to trade amongst each other as Africans. So I think that's my parting shot and a key message for us on the continent to keep driving as we go forward. The future is bright.
Yeah, the future is bright. Thank you very much, Willie Kanyeki, for talking to us. And we'll contact you some other time for more important issues on the African continent. Thank you very much.
Thank you too. Appreciate it.
Yeah, and that was Willie Kanyeki, the regional director for TerraPay East and Southern Africa, right here on In Depth. We thank you very much for being with us, you televiewers. It was a pleasure having you. Until next time, is bye-bye.